everything that's happening in the markets, and there's a lot happening over there. Now, volatility is to persist on Dalal Street as the tug of war between bulls and bears intensifies after an excruciating last week where small cap index saw close to 50% of its market cap eroded. Is there actually more pain ahead? That's what you want to understand at market opens today morning. Now, are the test results by mutual funds a cause of concern, and what are the global cues you need to watch out for in this trading week ahead? Of course, I'm not the expert, but I have Stacey here with me. Stacey Pereira from Moneycontrol joins us for the very latest. Good morning, Stacey. You are all smiles, but what is that black color? Is that talking about how things might not be looking quite bright this Monday morning?
Absolutely, Sonal. It's good to be back on CNN News 18 firstly, but the markets, yes, that might not be that cheerful, we could say, because of what we saw last week. Let me take you through at least, the week that was and wasn't something to be remembered for. Now, if you just look at the benchmark indices, we did see the Nifty close to down about 2%, the Sensex also seeing sharp cuts there close to 2%. So both the benchmarks seeing those major cuts, but that's not the whole story. The bigger pain was actually in the mid cap and small cap indices, which took huge cuts, you could say 4% and more for the mid cap, whereas the small cap saw really a bloodbath, you could say, of 5.31% down and about in last week's trade. But where did all of this really start from? It is what we're seeing, come out from SEBI, which is the regulator for the markets. SEBI came out and said that maybe these mutual funds that are investing into small caps, they need to rebalance, they need to recheck where really this money is coming from, and maybe they need to reallocate those portfolios, and which is why they spoke about a froth that was building up in this mid and small cap indices. Now, that's what pushed them to ask these mutual funds to go ahead and conduct what is called a stress test. Now, as of March 15th is when these mutual funds had to come out with the results of these stress tests, and this is because if you have to just take a comparison of what the Sensex has given in terms of the returns versus the BSE small cap index. Now, if you have to just look to 2023 till about February of this month, we saw the Sensex giving somewhere close to 24% returns, whereas the BSE small cap index, that one saw an exponential 74% returns, which was a bit of concern, saying, is there some overvalue or froth building up really? Now, with these stress tests, what really has happened? The stress tests are called because SEBI wants these mutual funds to do this test to see how far and how available that liquidity or cash is within them. So what they really need to do and give out is the number of days it will take them in order to liquidate about 50% of that portfolio. Now, the results have come out. Most of them have shown that it would take anywhere an average for a 50% liquidity for a mid cap fund was somewhere about 14 days, whereas for a small cap fund was 14 days, whereas for a mid cap fund was somewhere around 6 days. So that gave somewhat of a figure of where these mutual funds really stands when it comes to mid and small cap, and that's really going to also be the reason where you're going to see this rotation now in people's portfolio, where they might be looking at large caps instead of these mid and small caps. So that rotation is likely to happen, and which is why you're seeing this kind of pain. But besides what is happening in our markets, there are also cues that are there otherwise that we could be looking out for, right? For in the global sense of what is happening. This is a really crucial week when it comes to what central banks are doing in the larger scheme. About 14 central banks are going to be taking their interest rate decisions this week, and most important of them, of course, is the US Federal Reserve, which will be conducting its FOMC meeting on Wednesday. Now, this is going to be really important because if they do give some kind of indication of where we are in terms of those rate cuts, that is the biggest cue that everyone is looking out for. So you have the rate cuts from not just the US Federal Reserve, but the Bank of England, Bank of Japan, all of that we will be looking out for. So that will be a great indicator. You also have crude oil prices. Now, that is something that has been ticking higher all of last week, touching those $85 per barrel mark, which is for an important country like India quite something to be watching out for. Even though we've just seen those petrol and diesel cuts, that the government announced, we still have a higher crude oil, import amount. So that is going to change our fiscal bit as well. So all of those cues that we need to be watching out for. But for the market purely today, it is going to be a day for direction to see where the markets are headed. Are they just assimilating all of this data that is coming in? You also had the election, the schedule that came out over the weekend. That is something that could go on to cheer the market, hopefully. So we are going to see what direction that gets. But for now, this week is more of a caution week for the markets, where it's going to just wait and watch and see that direction. And of course, for all the important insights that you're going to get into the markets and all those actionable ideas that you would need, their premier destination, of course, for all investing views and for all your financial insights that you ever need to go for is, of course, the Moneycontrol Pro, which is brought to you by Moneycontrol. Back to you, Sonal.
All right. Thanks, Stacey, for all those details over there. And she rightly pointed out, you can log on to moneycontrol.com and also subscribe to Moneycontrol Pro to stay ahead on everything that's happening in the market.